Frankly, if you ask me that there is one group which has really got riveted is the entire Tata clan. From TCS to Tata Steel, with the exception of Tata Motors, let's look at trend, even a stock like Tata Communication, Tata Consumer, Tata, from the Tata stable, everything and anything, with the exception of Tata Motors, is now either at a 52-week high or nearing a 52-week high. Just a coincidence, but the kind of hard work what Chandra has done in order to change the entire business matrix, improve cash flow, focus on profit-making businesses, scale them up, get rid of loss-making businesses, break down the businesses, simplify them. Just to think about it, your Tata Chemicals, which had the food business and the salt business. Your Tata Consumer, which had the tea and the coffee business. What they've done, taken the food business away, put it in Tata Consumer, which becomes a food company, and Tata Chemical now becomes a pure chemical company. So there are a lot of alterations which I think Chandra has managed to do, and that in a sense is getting recognized in various Tata group of companies. Nilesh Shah of Envision Capital joins us now. Nilesh, fantastic to have you back. Thank you for joining us. Nilesh, when the market started rallying in April and May, best of the global gurus used the word liquidity, and everyone said markets are going higher because there is central bank policy action. Now I can see a widespread acknowledgement which is coming from more market participants that look, this is not liquidity, this is a market which is rising because there is a belief and there is a view that the virus has got contained and earnings will recover.
Yes, probably the current view is partly right, that at least there is basically now a far more established remedy to basically take care of the virus, in the sense that there is some kind of treatment there, which is getting reflected in basically improving recovery rates and still very low fatality rates. So that I think clearly is obviously, I think, come out to be reasonably true. And so to that extent, the scare around the virus has essentially come down quite significantly. Of course, there is no denying the fact that there is a strong liquidity as well. And in a way, this liquidity is very good because, in a way, it helps in containing interest rates. But more importantly, it's helping corporate India to basically raise capital. I mean, we look at all the QIPs which are happening and all of that. I think this is essentially corporate India trying to kind of muster up ammunition for the future. So I still think that there is a strong liquidity phenomena. And the third, of course, aspect is that whatever weak performance that we've seen for, to some extent, the March quarter and substantially for the June quarter, in a way should at best be treated as exceptional, because you're not going to have continued lockdowns on a nation basis. You probably, of course, have local lockdowns. You're not going to have continued lockdown. And so to that extent, I think it's a combination of course, a better way to handle the virus, who is, of course, liquidity continuing. And third, of course, that saying is that the lockdowns are not permanent and recovery is essentially coming back or is likely to come back over the next few months or so. So I think it's a combination of all of this, which I think has been playing out over the last few months or so.
Nilesh, can you elaborate or enumerate perhaps 2 or 3 data points or cases of companies where the comeback, both in terms of demand and management commentary, has pleasantly surprised you and you are delighted? Because all of us had a view of the world in March and April. We all thought that the economy will be punctured for a long time, earnings would be dented for an extended period of time. But the reality is very different. So in your understanding of the companies you track and the data points which you monitor, where are you pleasantly surprised and delighted?
I think the continued, I wouldn't say a surprise, but surely I think which has been very delightful in terms of the management's commentary, I think is pharma as a sector. Clearly, I think out there, of course, post-March, the breakout of COVID, it was essentially becoming clear that pharma as a sector could potentially do well. But the kind of performance which the pharma as a sector has been kind of churning out for both March and June quarters, and the kind of commentary that they are basically holding out, in terms of their outlook for not just the next 2 or 3 quarters, but even for the next 2 or 3 years, I think the commentary has essentially been the strongest in the pharma sector. And that's one sector which clearly stands out. The other area which essentially I would not say the commentary is strong, but I would say is very stable, is essentially technology services and consumer staples. These are the two sectors where I would say the commentary has not been very bullish or very optimistic, but it's been very stable. And basically, these are the two sectors where the managements have alluded to basically kind of, normalcy kind of coming back. And obviously the second half being better than the first half. So I probably think that it's essentially on one hand, the global facing businesses, which essentially is pharmaceuticals and technology services, which are essentially where the commentary has been strong to stable. And I think it's consumer where it has been relatively more stable. And the third area, of course, has essentially been within the financial pack, but the non-banking or the non-credit side of the financial space. So the credit card companies, the life insurance companies, general insurance companies, mutual fund companies, these are essentially the kind of companies which again are witnessing relatively stable times. So there is a whole bunch of these sectors where the commentary has been strong to stable.
Okay. What is the best way to look at pharma? It's a very divided sector. I can start with an Abbott, which is a MNC company MNC company which has business operations in India, and I can go all the way up to a complex company like Sun Pharma, which has got focus on generics, R&D, and other speciality elements. What is the best way to invest in pharma after the recent rally, and given which way earnings are moving?
So I clearly believe that we are just probably at the start of the rally in the pharma sector. It's quite possible that the strong earnings momentum may continue for several more quarters ahead, or maybe even for a couple of years at least, or even if not more. And the way to kind of really look at it is to basically look at different plays. Unlike, say, consumer or, say, banking, where you can just pick one stock and try and ride it, I think, in a way, the pharma as a sector is very heterogeneous. And pretty much every company has its own strategy. So I think in the case of pharma, it would be best to kind of, deal with owning a basket of opportunities. And I think within that, one is to kind of really look out for the API plays, where there is still strong pricing momentum that they are enjoying. And there are likely to be some more policy initiatives which will benefit the API space. So that's one. So look at companies which are substantially API plays. The second opportunity is to look out for companies which probably has a very strong possibility of going positive or striking it in terms of vaccine as well as medicines for COVID. I think that's something which will continue to really play out. And I think that's basically the second way to look at it. And the third is to look out for companies which have a very, very strong domestic portfolio and have some overlay of the regulated markets as well. I think a combination of maybe these 3 to 4 opportunities essentially probably would be the best way to kind of play the pharma sector and be in it over the medium term.
Sure. Nilesh, but where in the curve are we on when it comes to pharma as well as IT? Do you think the easy money is now behind us? And are these sectors going to go into time-wise consolidation, or do you think the story is just about at the nascent stages?
Well, I think in the case of technology, probably the easy money is already there, because technology as a sector is not going to grow into high double digits. It will at best remain a high single-digit growth opportunity or a low double-digit kind of a growth opportunity. And so to that extent, I think, in a way, in technology, I think a fair bit of the easy money is already there. But nevertheless, it still has the ability to kind of, in a way, outperform. But when it comes to pharma, I still think that, I wouldn't say that we are at the start of the rally, but I still think it has got a long way to go, because in the case of pharma, there can be a lot of positive surprises. There can be a lot of developments which could be potential game changers for individual companies. And I think the beauty about both pharma and IT is that essentially whatever India does or whatever India caters to rest of the world is pretty much non-discretionary, which means that I do not think the world today can do without either the Indian technology services companies, or I don't think the world can do without some of the Indian generic companies. So to that extent, the demand is relatively non-discretionary, and I think that has basically got reflected and manifested in the earnings for the last 1 or 2 quarters as well. So I probably think that in the case of pharma, we still have a long way to go, and it looks like that the tailwinds that they're currently enjoying are likely to sustain for a few more quarters ahead.
Sure. The other theme, Nilesh, which has done well in the market, and this is even the pre-COVID times for almost 2 years now, specialty chemicals has been the hot story. Continues to do well, and now you're seeing ancillaries like some of the packaging films businesses as well do very well. And I was just looking at the entire list of names, Polyplex, Uflex, Cosmofilms, Jindal Poly, all these stocks have been doing very well. Anything of interest to you within this pocket, or perhaps even specialty chemicals?
I showed the latter pack, which is essentially all this, the polyfilms companies. I think these are currently enjoying benefits of lower raw material prices, lower crude oil prices. That's essentially the base for them. And they're enjoying benefits of this. And these are at best cyclical plays. These are those once in 3 years, once in 5 years, where they suddenly kind of come up because they have benefited because of something happening in the external environment. But the bottom line is that they remain extremely capital-intensive cyclical businesses. So to that extent, I think medium to long-term investors can at best are probably better off avoiding them. Of course, if you're there to kind of make some trading gains, that's perfectly fine. But of course, you have to keep in mind that you don't become an Abhimanyu in these kind of businesses. You need to have an exit strategy very well. So that's something which one needs to kind of keep in mind. Regarding specialty chemicals, yes, I still think that that's an exciting space. Pretty much the entire contract manufacturing space, and to that extent, there's some commonality with pharma. Just that probably at this stage between pharma and specialty chemicals, I would probably be more positively inclined towards pharmaceuticals versus specialty chemicals. But having said that, I think specialty chemicals will also continue to enjoy some of the tailwinds because of strong global demand and the fact that Indian specialty companies definitely have some value proposition to offer to the world and therefore continue to kind of grow. So yes, I would be positive about it, but I think in terms of the pecking order, clearly I think pharma stands up high on top there.
Okay. Nilesh, while the most recent data also suggesting the worst is over for the urban markets, it's really the rural recovery everyone's been focused on. And in light of that, of course, specialty plays, but also select auto names that have been seeing a good run on expectations of better numbers going forward. What's your view when it comes to the agri recovery or the rural recovery that we are seeing and the sectors that are likely to benefit? Auto, for example, those particularly when it comes to tractors and so forth, we have seen a great rise in some of those stocks.
Clearly, I think, the rural economy and the buoyancy in farm output and farm incomes is something which I think is a silver lining for India and the Indian economy. And of course, that's been supported by a reasonable start to the monsoon season, though, of course, we still have a couple of more months to go in terms of monsoon. But on the whole, clearly, the rural economy and the farm sector seems to be kind of coming out of a multi-year kind of a downtrend or subdued activity. So to that extent, that's a very encouraging sign. And therefore, we're very constructive on that. Clearly believe that even within the rural economy, the best way to really is to kind of look at it in two ways. One is, of course, how do people basically improve their overall rural homes? And of course, that means you buy more of consumer appliances, more of kitchen appliances. So that's the way we've been looking at it. And I think we're very positive there. Of course, in addition to all of that, digitalization and, of course, the internet economy is ensuring that The rural households also have access to some of these products, which earlier they did not have. So to that extent, some of these businesses are very, very favorably placed. The second is to look at plays on rural housing. Clearly believe that when you have strong growth in incomes, clearly housing is one area where you basically try to spend it. And therefore, I think some of the building material companies look extremely kind of well poised for strong growth in the coming quarters. So be it some of the tiles companies or some of the cement companies, I think they seem to be kind of very well placed to benefit out of basically an expected increase in spending on rural housing, driven essentially by strength of the rural economy. Yes, of course, some of the auto packs, especially the tractor manufacturers, have done extremely well. They've seen some strong growth in demand as well. But again, I'd probably say that these are at best cyclical businesses. You definitely see those 1 or 2 years of bump up in demand. Clearly, the current year is essentially an outcome of that. There is yet no trend which suggests that this is essentially a secular trend. And clearly, if you look at it, I mean, over the last 5 years, tractor sales actually have gone nowhere as an industry. So to that extent, I'd be very cautious in terms of now looking at any of the tractor companies or anything like that. In terms of, again, auto, I clearly believe, yes, the two-wheelers are a good or a great way to play rural demand and strength of the rural economy. And so to that extent, of course, some of the stock prices have run up. But I think on corrections, they could provide a fantastic entry opportunity and could be a good way to kind of play. So yes, on the whole, we are big believers of the rural economy and of course, an expanding farm output. And we think there are several businesses and sectors which are going to benefit out of that.
So Nilesh, ultimately comes down to just one thing. What our viewers want to know is that what has Nilesh Shah added or subtracted in his portfolio in last 1 month?
Okay, so I think over the last 1 month, we've basically added to some of the pharma names in our portfolio. So we've had a combination of three names. We've added Alchem Laboratories, Laurus Labs, Kedila Healthcare. In building materials, we've added Kajaria Ceramics. So it's essentially a whole bunch of some of these names. These are some of the sectors that I alluded to. And these are some of the names that we've recently kind of invested at Envision.
Last time when we spoke, Nilesh, you said that you were quite excited about manufacturing moving to India. You're quite excited about names like AIL. Now that it is real, and now that this mega trend where manufacturing will move to India is more like a necessity and not a rhetoric, how can stock market investors capitalize from it?
So, yes, I think that's an excellent kind of an opportunity. And I think we are very big believers of that opportunity. Be it the Atmanirbhar program or essentially Make in India. I think these are essentially opportunities which are now looking more real. There have been several reforms over the last few years. And I think some of these reforms are also percolating down to basically the state levels. And that I think is very heartening to know. And of course, some of the ways to play it is to look out for, say, for example, the auto ancillary space, which benefits not just out of domestic demand, but it also benefits out of basically exports as well as replacement. So I think that's one great way to basically play it. The second way to really play it is to look at some of these industrial materials and industrial consumables. So companies which make abrasives, refractories, electromagnetic materials. So that's again a very, very interesting opportunity where you can not just basically make in India for India, but you can essentially manufacture in India for rest of the world. So that's again a great kind of look. And third, of course, is basically within pharmaceuticals, you have the entire API opportunity, the advanced pharmaceutical ingredients opportunity, or what is normally called the bulk drug opportunity, where again, there is basically a compelling reason to kind of increase India's competitiveness and manufacture back home and export to rest of the world. So I still think that again, even within pharmaceuticals, you can actually play the local manufacturing opportunity. So I think there's a whole variety of ways, a very diversified set of ways in which you can play this very big theme, which I think is is getting stronger with every passing day and is likely to kind of catapult into something really big over a multi-year horizon.
Okay, so Nilesh, closing comments. I was just mentioning before we started this interaction that look at Tata Group of companies. In last 3 years, with the exception of Tata Motors, all Tata Group companies, in a sense, they've managed to take a giant leap. Some have seen a P multiple expansion, some have seen an earning expansion, some have seen both. Businesses are simplified. And the group now is very cash flow focused. So if you have to, let's say, take a bet on a group or a outsized group of companies managed by an Indian conglomerate, which group would you bet on?
No, I think there are multiple such groups or opportunities which you can really kind of in a way bet on. But clearly, yes, Mukund, I completely agree with you that Tata as a group essentially has been the hallmark of ethics, quality, performance, and delivery. It's hard to kind of see a group which scores very high on all these fronts. And clearly, I think Tata as a group has proven it time and again that they can be down temporarily, but they remain strong. And so to that extent, I think, in a way, hats off to its new leader, N. Chandra, for really steering the group out of some of the challenges and difficulties that they had faced earlier on. And I think they're positioned in some of the right sectors, be it technology or consumer. Yes, Tata Motors continues to still essentially be one of the challenges which remains, but I'm quite sure he will essentially have a remedy for that as well. So I think on the whole, it's hard to kind of come across a group like the Tata Group, which scores high on all parameters that we as investors and we as citizens of the country look forward to. So to that extent, I think, great to see the Tata Group come back in such a roaring manner. And I think it sets a perfect example for many of the established groups as well as budding entrepreneurs in terms of the way forward.
Okay, Nilesh, great to have you on the show. And thanks as always for taking the time out and joining it today. That's the